Welcome back. As average mortgage rates have been above 7% for nearly 2 months now, homebuilder sentiment is now officially negative. In other words, homebuilders are pessimistic regarding our U.S. housing market. And in today's video, I'm going to share all the details, but also provide my opinion regarding how this will impact our housing market going forward. And by the way, if you guys are new here, I invite you to subscribe to this channel right now because I post frequent housing market updates so you guys can make a more informed decision about whether to buy or sell a house. And with that said, let's begin today's video. This report here is actually from the National Association of Homebuilders here. I just posted today at the time of filming this video here. So it says here, persistently high mortgage rates above 7% continue to erode builder confidence as sentiment levels have now fallen to the lowest levels in 5 months. So they have an index which is called their housing market index. Anytime their index dips below 50, it means that home builders on a national level are more pessimistic regarding our US housing market. And any number above 50 means that home builders are actually more confident in our market here. It says here, builder confidence in the market for building new single family houses in September fell 5 points to 45. And that, by the way, follows a 6-point drop in August. So I want to provide kind of some analysis regarding how is this compared to previous years here. So their index right now is at 45. This marks the second consecutive month in which builder confidence has now decreased. On top of that, builder confidence is at the lowest levels since April of 2023. So big picture right here, builders on a national level are actually pessimistic regarding building new single family houses. Also to provide some context regarding how the index at 45 compares to years past year. By the way, back in December of 2022, their index was only 31. That was more or less a 10-year low regarding builder confidence in the US. I say that because before that, the lowest levels was back in June 2012. Here's a chart showing builder confidence over the past 2 years as well. So right now, the index is at 45, much higher compared to the lows we saw back in the last half of last year, but well below the levels we saw in 2021, as well as the first half of 2022. So what are home builders doing right now in order to increase sales, given the fact that housing affordability is more or less at an all-time record low? It says more home builders are reducing home prices once again in order to increase sales. In September, 32% of builders reported cutting home prices compared to only 25% in the previous month. That's the largest share of builders cutting prices since December of 2022, when at that time, 35% were cutting home prices compared to only 32% this month. And by the way, the average price discount remains at 6%. Meanwhile, 59% of builders provided sales incentives to home buyers in September, more than any other month since April of 2023. The Builders Association also included this new question as well in their survey for the month of September. In that survey, they found that 42% of new single-family home buyers were first-time home buyers. This is up greatly from the average of 27% going back to 2018. Also, builders overall reported a decrease in overall sales conditions right now, sales expectations in the next 6 months, as well as a decrease in buyer traffic overall in September as well. Now, here's what's happening as well, because often we think about rising interest rates and how that impacts home buying demand, but also builders overall who don't have $3 billion in cash, like Lennar, for example, use loans for acquisition of land, development, and of course, construction as well. So there's 2 reports I want to share with you guys. And again, I'll share how this could potentially impact our housing market at the end of this video here. It says interest rates on loans for acquisition, development, and construction, these are AD&C loans, continue to climb in the second quarter of 2023. This was just announced on August 25th this year. So quarter over quarter, this is the first quarter this year compared to the second quarter this year. The contract interest rate increased on all 4 major categories for loans tracked in their survey here. So for example, interest rates for land acquisition, loans for land development, and also loans for speculative single-family construction increase as well. Get this, in all 4 cases, and also loans for pre-sold single-family construction also increase as well. So this is a key point here. In all 4 cases here, the interest rate was higher in Q2 of 2023 than it had been in their series going back to at least 2018. So the highest rates they've seen since at least 2018 when they began collecting data on this. The rates have been climbing steadily every single quarter since the start of 2022, with one minor exception. That was for land acquisition loans in the third quarter of 2022. So not only do we have an environment in which average rates that people are using to buy houses, home buyers, at very close to 20-year highs, but also this is impacting loans as well for home builders as well. So this could limit home construction going forward here, which of course will limit housing supply as well. Here's yet another trend we're seeing right now that also could impact the supply side going forward as well. This is because that home builders overall have been reporting tighter lending standards for 6 consecutive quarters now. What of course this means is that it's getting more challenging to get a loan now for 6 consecutive quarters because lending standards have been getting tighter. This is something we also know as well because total volume of loans for acquisition, development, and construction posted a decrease in the second quarter this year as interest rates continue to rise and financial conditions are becoming more tighter. So the volume of 1 to 4 unit residential construction loans actually decreased by 2.8% during the second quarter this year. I also want to share this with you guys as well because this is according to John Burns Research and Consulting. They actually provided the cancellation rates for new home construction. These are home buyers that are canceling their contracts to buy houses. So for the month of August, that share was 10.2%. Again, only for new single-family houses. Redfin reported last week that the share of people canceling contracts was 15.7%, whereas new home sales, based on this survey here, was only at 10.2%. This is also well below the 17.9% we saw 1 year ago. And obviously the rate right now at around 10% is well below the peak we had back in September through December last year when the cancellation rate was actually over 20%. Additionally, the cancellation rate this August at 10.2% is more than half the rate we had back in October and November last year, when at that time the cancellation rate was around 24%. All right, I know that was a lot to cover in today's video, so here's a summary, and also I'll share my opinion regarding what this all means for a housing market here. With average 30-year fixed rates above 7% for nearly 2 months, home builders are now officially pessimistic regarding our U.S. housing market. They're less confident regarding current sales conditions, sales expectations in the next 6 months, and of course, home buyer traffic as well. When builder sentiment decreases, a decline in housing starts normally also decreases as well, which of course limits housing supply. So here is a chart showing just that. The blue line right there is the National Association of Home Builders HMI, or their home market index or housing market index, which of course is a measure of builder confidence. So as you can see here, in 2012 through 2019, overall builder confidence was increasing, and in turn, single-family housing starts were increasing as well. That's the red dotted line there. In contrast, when builder sentiment was decreasing in 2022, so did housing starts as well. This is also something we know as well. So new construction will also be limited by the highest interest rates seen since at least 2018 for the acquisition, development, and construction of new houses as well. In addition, lending standards have grown tighter for 6 consecutive quarters as well. In my opinion, this will limit new home construction and thus supply in the months ahead here. Bottom line, if you guys want to see a housing market crash, which I get it if you guys want to see that because we have high home prices, high rates for a long, long time. Home prices have increased by more than 20% ever since 2020, and rates have more than doubled in that time frame. If you're a renter, you're seeing your rents going up. You're seeing the cost of basically everything going up over the past couple of years here. So you want to see the housing market crash so you can buy a house. I totally get that. But based on the data we have today, we don't see a surplus in the amount of houses for sale, which would cause a housing crash. In other words, if we want to see a housing market crash or for home prices to fall greatly, we need to see supply outpace demand. A surge in supply is not coming thus far from existing houses because homeowners are reluctant to sell because they don't want to lose their very low rates. And on top of that, home builders are now pessimistic about building new houses as well. Therefore, the United States housing market is still unbalanced in favor of sellers on a national level. Of course, there are some areas in which it's a buyer's market and other areas in which it's a strong seller's market. Every house market's different. Will that change given the rapid rise in rates over the past couple of months here? Let me know in the comments below. And lastly, this is the most important one. I appreciate you guys watching today's video and of course for supporting my YouTube channel. Hope you guys have an awesome day. I look forward to seeing you on the next video.